Hey traders, it's John Fortune here of this week's Weekly Forex Forecast for the 3rd of August to the 7th of August 2020. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to be highlighting some of the targets that we're going to be looking for in the coming week and also for the weeks ahead. So I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, last week we highlighted there had been a major break to the downside in the dollar index, and we were looking further declines to the downside. We had a really nice move to the downside, taking out both targets of the 93.83 and the 93.42 from last week. So very simply put, going into this week, we are looking for further declines in the DXY, and we do go into next week with a bearish bias on the dollar index, which means that we favor short positions in dollar pairs, so dollar weakness in dollar pairs next week. In the DXY, you can see we had a big sell-off, and there's a huge gap between where we're sitting and the previous broken support at the 96.82. So very unlikely we're going to come all the way back, certainly not in 1 week to the 96.82. Going into this week then, any pullback in this area, and we're starting to get a bit of a pullback, I expect to see a bit more of a correction at the beginning of next week. But any pullback in this area, and we've highlighted a kind of medium term support turning resistance area at the 94.55 that you can look at, but any pullback towards this key area, we're going to start to look for bearish setups in the dollar pairs, and we're going to be looking down towards the next key of support to the downside of the target set at the 91.99. So just to summarize, this bear trend is fully intact. Any correction is going to be viewed as an opportunity to look for short setups in the dollar pairs next week, and by short setups I mean dollar weakness, so euro dollar to the upside as an example. So the next market we're going to look at is crude oil. Now, last week, despite the sell-off in the dollar index and the dollar itself, we didn't really see any rally in crude oil, and it's probably because this is starting to get a bit stretched. This does not bode too well for crude oil because there is an inverse correlation between the dollar and oil. So if crude oil cannot really explode to the upside or move to the upside on that sell-off, we do go into this week with a bearish bias on crude oil, and if we are going to trade this market, we would favor short setups to the downside. Any pullback in this area, and preferably if we could come back and retest broken supports from the past, turning resistance at the 41.29, this would be a great place next week to start to look for bearish setups. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 36.58. So the next market we're going to look at is euro dollar. Now, euro dollar was a really nice performing market last week. We were looking for a rally to the upside in last week's video, and we did have a really nice rally, taking out the target at the 1.1718, and also the second targets we set at the 1.1807, which was right around here. And you can see we pretty much finished at the second target at the end of last week. So very simply put, going into this week, we are still looking for further advances to the upside, and we do favor dollar weakness. Any pullback, and once again, you can see we've added a kind of midpoint key area of support, so a smaller, less significant area of support at the 1.1624 because of the distance between major support at the 1.13680 and where we sit. So any pullback to this midterm support, and we're going to start to look for bullish setups in this market once again. And we're going to be looking at initiating longs up towards the next key area of resistance, the upside of the target set at the 1.2050. So the next market we're going to look at is pound dollar. Now, pound dollar was another really nice performing market last week and a really good long. We had this big rally to the upside, taking out both targets set from last week at the 1.2900 and also the 1.3029, which was right here. And we finished the week pretty much round about the end of the second key of resistance to the upside and the second target from last week. Going into this week, we do favor bullish setups in this market, but we are coming very close to a key area of resistance to 1.320. So as a result, what we'd like to see is a pullback, and any pullback in this area next week is going to be viewed as an opportunity, because a pullback here will give us a good rally into this key area of resistance, and it will give us a good opportunity to get good risk to reward setups, which we couldn't get in this area over here. So any pullback in this area is going to be viewed as an opportunity to start to look for bullish setups. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 1.3200. And if we can get a breakthrough here, we're going to be looking up towards the next key of resistance, the upside and target 2 at the 1.3364. So the next market we're going to look at is US dollar Japanese yen. Now, last week we started the week right here, and we said in last week's video we were looking for a sell-off and a decline into the 104.62, and you can see that was the move from last week, and we bounced at this key area of support highlighted. So very simply put, going into this week, because we had quite a big bounce off of this, we are looking for further declines, and we are going to look once again down to the 104.62. Any further pullback in this area, and preferably if we can come and retest broken support from the past, turning resistance at the 106.73. This is going to be a great place once again in this market to start to look for bearish setups. And we're going to be looking down towards the next key of support to the downside, the target set from last week at 104.62. And if we can get a breakthrough here this time, we're going to be looking down towards the next key of support to the downside and target 2 at the 101.86. So the next market we're going to look at is Aussie dollar. Now last week we were looking for a rally. We started the week here and we were looking for a rally into the key area of resistance at the 0.7203, which was right here. And you can see we rallied into this key area of resistance. This was our target from last week, and we started to sell off, and that was the move last week in Aussie dollar. Our second target to the upside from last week was the 7290. So very simply put, we are still focused on bullish setups in this market. Any further pullback and preferably a retest of broken resistance from the past, turning support at 0.7110, is going to be viewed next week as an opportunity to start to look for bullish setups. And if we get the right kind of bullish setups in this area, if we start to correct and we break out to the upside, just like this, we're going to be looking at initiating longs up towards the next key of resistance, the upside of the target set at 0.7290. And if we can get a breakthrough here, we're going to be looking up towards the next key of resistance, the upside and target 2 at the 0.7386. So the next market we're going to look at is New Zealand dollar. Now last week we started the week in this area and we were looking for a rally to the upside into the 0.6756. We did have a move up, but it was kind of struggling, and the New Zealand dollar underperformed a lot of the other currencies against the US dollar last week. Very simply put, going into this week, we just view this as a correction, and any further pullback towards 0.65610 is going to be viewed once again as an opportunity to start to look for bullish setups in this market. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set from last week at the 0.6756. So the next market we're going to look at is US dollar Swiss franc. Now last week we were looking for a decline to the downside, and we took out both targets set at the 0.9153 and the 0.9072, which was right here. This was our second target, and you can see we bounced from this at the end of the week, and that was the move for the week to the downside in US dollar Swiss franc. Very simply put, going into this week, we do still favour short positions in this market. It is a little bit extended, so I would not be surprised to see a correction first or further appreciation of the US dollar against the Swiss franc as a secondary trend, as a correction here. And this will be viewed going into next week as an opportunity to once again start to look for bearish setups in this market. And we're going to be looking at initiating shorts down towards the next key of support to the downside of the target set at 0.8837. The next market we're going to look at is US dollar CAD. Now we started the week here and we were looking further declines to the downside, and we did have a sell-off, but we started to bounce back up and we didn't take out the target set last week at the 1.3279. This really, as it stands, is just going to be viewed as a correction in the US dollar CAD for the time being. Any further advances to the upside in this market are going to be viewed as an opportunity going into next week to once again start to look for bearish setups. And we're going to be looking at initiating shorts down towards the next key of support to the downside of the target set at the 1.3279. And if we can get a breakthrough here, we're going to be looking down towards the next key of support to the downside and target 2 at the 1.3203. And last but not least, we have gold. Now, gold has been a fantastic performing market. We did take out all-time highs, and this was, as I said to you guys, a buying opportunity, and we have rallied since then, and we smashed through both targets from last week at the 1920.34 and the 1938.06. Very simply put, we're starting to lack a bit of momentum up in this area, so what I'd like to see is any pullback, and we've highlighted an intermediate area of support at the 1905.66 because of the gap between major support and where we sit. Any pullback in this area is going to be viewed as another opportunity to start to look for bullish setups in this market. And we're going to be looking at initiating longs up towards the next key of resistance, the upside and target set, with a 2032.12. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a nice weekend. I want to wish you all the best with your trading next week. The only thing left to say is take care and don't forget to trade safely.